Aloha, I'm Mia. The government just put up a bigger shield to protect your wealth from estate taxes. Starting in January 2026, every person get a $15 million shield. If you are married, you and your spouse together could get $30 million shield altogether. And what does that shield do? It blocks the IRS from taking 40% of anything above the line, and that's not small. It's generational, right? Because you could build generational wealth from that. Why does it matter? So this shield was about to be cut in half before the big beautiful tax law, right? So with the Trump era rule that was expiring in 2026, that means the shield would have been dropped to about $6 to $7 million per person. So that would let many more families being exposed. So if you have built a business or you bought properties or just invested well, you would hit the lower shield a lot quicker than you think. Like say one of our clients, he basically just doing some investing on the side, more like passive, and he was able to amass about 10 different properties, just 10 different homes. It's not something fancy, but you think about it, if you keep saving and investing throughout all your working years, it's not that hard to be able to get 10 properties under your belt. It's very doable for many people, many Americans. So before all that inflations, he was kind of wealth under the threshold, but with all the inflation, luckily, right, it's good that inflation kind of bring up the property valuation, bring up the price, but then he run into the estate planning problem where the property have appreciated so much that it would be way more than the earlier threshold. I believe it was like $12 million, and he was already above that because of all the inflation they're doing to the price appreciation on his properties, which is good on the property side, but bad for estate planning. So now with this law, he has some breathing room, right? So like if you are in similar situation, if the threshold was to be dropped like it was before at the $6 or $7 million threshold, it's not like a house these days would be valued like easily $1 million, right? If you have, that's only cover like say maybe 6 to 8 houses, right? And then you would have the rest being exposed to estate tax on the federal level, right? Not counting the state depending on where you live. So having this amount increase with the big beautiful tax bill, it's really helped this particular client, and I'm sure it helped many of you as well. So with regular estate, so if you get hit with this estate tax, so it's about like 40 cents on every dollar. But with this larger exemption on estate tax, then most likely for many people you'll be able to avoid the estate tax on the federal level. So let's put this into number. Say you got a $20 million in assets, like say you have a business or you have some rentals, so maybe a farm. So under the old 2026 rules, only about 6 to 7 million was protected by the shield. The rest gonna be taxed. So that $5 million plus bill to the IRS that's gonna be slapped on your desk. With the new $15 million per person shield, and for a couple, it's become 30 million. That same estate owns nothing. So everything stays in the family. So that's what you would intend it, right? So when you want to build your legacy and leave money, you want to leave everything to your family, why you would write Uncle Sam into your will, right? So the difference between selling assets to pay Uncle Sam, to pay the tax man, and actually keeping what you build. So this is what this new threshold does for you. So who needs to pay attention? So family whose total wealth is $10 million up. Farmers and landowner with high value property. Business owner who want to hand the company down, not selling it. Anyone who thought the 2026 sunset will go into wreck their plan. So if you are building something real, you need to know how the shield works for you. The $15 million lifetime shield per person for gift and estate. The $30 million shield for couple if you use portability. So file the form 706 when one spouse dies to carry the unused shield to the other spouse. And you have to think about portability has to do a lot with the state level as well. So you want to look into your estate tax law and plan for that as well. Annual gifts are separate. In 2025, you can give $19K per person, most likely $20K in 26 without touching the shield. You also get step up in basis. This is still apply. That means when your kids inherit your asset, they get a reset cost basis to today's value. So no capital gain on past growth. So don't just wait for 2026. In 2025, you have got a $13.99 million shield. If your estate is already bigger than $15 million, you might want to use today's shield to push assets out before they grow more. For example, you can give $10 million worth of stock in 2025. If it doubles to $20 million later, that growth is out of your estate forever. And how the well play the game. So move appreciating asset early while the shield cover them. What to do in 2026 and beyond. So when the $15 million shield kicks in, here's how to maximize it. You can do trust. You can do dynasty trust. You can do spousal trust, grantor trust. They keep control while still moving assets out. And think about portability. So always file the estate return so you don't waste your spouse shield when, God forbid, they pass away before you. You always to do valuation discount. So say family partnership or LLC can let you move more under the shield because appraiser value the share lower. You think about inflation adjustment, so that $15 million isn't frozen. It will grow over time, giving you more room to work with. Here's the trap. The federal shield is $15 million, but some states get that shield as low as just $1 million. That means even if you are covered federally, your state could still come knocking and get some money out of that estate. Always check state law. That's where family get blindsided. Here are some extra plays for the wealthy to use. You want to think about charitable strategies. You can use donor advised fund or charitable trust to cut tax while building legacy. You can also use life insurance trust. If your wealth is over the shield, life insurance can cover estate tax without forcing asset sales. Education and housing trust, you can use annual gift, exclusion plus the shield to fund grandkids' future. You can do family loans and then plus forgiveness. You can pair loans with annual forgiveness to move wealth smoothly. Say for example, you can provide a loan to your kids or grandkids to do something, and then every year you forgive up to the annual gift limit amount. So if you give it to one kid and you are a single person, say in 2025, you can forgive the $19K. That is the annual gift exclusion for 2025. And if you with your spouse giving it to one kid, then you can double that amount, right? And if your kid is married, so with another spouse, so you can basically double that amount again. So 19 plus 19 and plus another 19 and plus another 19. So that's a lot of forgiveness that you can actually do. There's more body counts, it's better. Some bonus tip for where most people miss things. Usually people don't think about the annual gift exclusion. You want to use it aggressively. So say a couple with 3 kids and 6 grandkids would move hundreds of thousands out every year without touching the big shield. So don't give low basic asset too soon. If you hold them until death, your heir get the step up in basis. So that could save them huge capital gains later. You also want to coordinate estate planning with income tax planning. So too many people silo to them. So these two actually interact with each other and help you compounding the tax effect. So quick gut check, would you rather give wealth away while you're alive so you can watch your family use it, or leave it all when you are gone? So drop gift or inherit in the comments. I want to see how you see legacy. What we can do right now. So first, you can add up your total wealth, including land, business, life insurance, etc. Second, if you are near or over the 225 shield, meet your estate planner before the year end. Third, decide whether to give in 2025 or wait for 2026 bigger shield. Fourth, get trust set up if control matters to you. Fifth, always file for portability, don't wait a shield. Sixth, revisit your plan every 2 to 3 years as assets grow, rule shifts, inflation slip the shield up. The big beautiful tax bill gave us a big shield, $15 million per person, $30 million per couple. For most families, that means federal estate tax is off the table, but don't confuse that with no planning. The wealthy family who stay wealthy, they use shields, trust, portability, and state level strategy to keep every dollar working for their legacy. So don't sit on the sideline, and you want to build your plan, you want to use your shield, or the IRS end up as your biggest heir. You want tools to map this out for yourself? You can check out my estate planning worksheet in Pro Deduction SC Shop or Dive Dipper with AssetsWealthInstitute.com. Thank you for watching, and I'm Mia. I see you at the next video. Aloha!